All right, Bannock County Commissioners are back in session, and we're going to review our audit for this year, past year.
Sounds good.
Introduce yourself for the record.
Okay, my name's Fred Goodworth with the firm of Wipfli. Happy to be present. We appreciate the opportunity to work with the county from a financial audit standpoint. So maybe I'll start with our reports and then we'll back into other things. But so you engage us to do a financial audit of the county, which our audit report is in it's on page 9 is where it begins. And basically we give an opinion on the government-wide statements as a whole. We give an opinion on each of the major funds in both the governmental funds and the enterprises funds. And then we give an opinion on all the remaining non-major funds. So this is a multi-opinion letter. And I'm happy to report that it is a clean opinion on the financial statements, or an unmodified or unqualified opinion, which is what you want. And so with that covers pages 9 through 11. There's a couple things that I'll point out on those pages. Is it does reference there's required supplementary information, and Christy and her team puts together their annual report. And so what belongs to us is really just our opinions in this. And so it's very limited. The rest is really belongs to the county and all their hard work. And there's a statistical section, there's a management discussion analysis, and then there's required supplementary information and other supplementary information besides the basic financials. But our opinion is on the basic financials and the footnotes there. And then we also look at the required supplementary information as well. And then because it's a government entity, we also give a report on internal controls. And that's the very last 2 pages of the report, starting on 127. So basically we give an opinion on a report on internal control over financial reporting and compliance and other matters based on an audit performed in accordance with government auditing standards. And this is a report. It's really not an opinion report, but it's to say if we uncover during our audit something that we feel is a material weakness or a significant deficiency, then we would report that to you in this report. And happy to report that we didn't have any material weaknesses or significant deficiencies that we found during the audit. We do have some management letter comments that we've gone over with Jason and Christy, the suggestions for improvements. But we didn't really have any significant adjustments to the financials. There were some proposed adjustments, but there wasn't anything overall significant, so we didn't feel like there were any significant deficiencies. Some of those are important, those comments, and we visited, but some of those in my mind are very important, and if they're not addressed, they could turn into what I believe is a significant deficiency or material weakness. So, but I can go over those comments later if we want.
And they're not part of this report?
Not part of this report. Okay. So they're not even mentioned in here, which is actually good. That's what you want.
Okay.
So I guess
at this point they're just kind of nudge suggestions. Hey, this might be a better route.
Okay.
Type of a thing.
Yeah. So I don't know. Maybe we'll just, and Christy, you jump in, or Jason, you jump in here. I would probably start with, just some high-level things, just to show you where we sit. But what's your preference? I mean, there's a lot of pages of this report.
No, just in high level. I mean, the big part is, you just told us a big part is.
Yeah. Yes.
We're good.
Yep. You're good.
No red flags. Nobody getting arrested.
And these have been submitted to GFOA again for the certificate. So if you look on page, let me find that. Page 4.
Page
Look
4.
at the certificate of achievement in excellence for financial reporting. It's through GFOA. That is supposed to show a standard of reporting and documentation, as well as if we were to ever go bond to bond, this would supposedly give us a better bond rating so that we could get a better interest rate. So this is bragging rights for the entire county that we received this. So, and we've received
How many years in a row? Been a lot, hasn't it?
30,
Mhm.
I gotta find it in the letter because I can never remember how many. All those things on my wall is what that comes from.
Well, Dan's having to put
This
new
is the 30th.
nails in the wall to.
Yeah, this is the 30th year we've received this. So hopefully in 20
Congratulations.
we'll get 31. So,
Congratulations.
Maybe I'll hit a couple of financial highlights. There really weren't any big changes in accounting policies. Last year, the lease implementation was a fairly large implementation. This year, there were
SPIDAs, but we don't
SPIDAs,
have any.
which is subscription-based information technology arrangements, similar to leases, but you're leasing information technology. But there weren't any that were long-term, so the nice thing was there wasn't anything to implement there, but that was a new accounting standard that we had to consider, this year with those SPIDAs, if you want to use the acronym. But maybe I'll highlight a couple things on the financial section, which starts on page 21. And this is government-wide, and it has your government activities and your business type activities in total. And so this is really high level, and this is a higher level than you're dealing with on a day-to-day basis. But, it does show total assets for both government and business type activities, 176 million. And then the liabilities and net, and I guess your net position is almost 125 million. Almost 71 million of that is invested in capital assets. So most of those assets, the bulk of those at the government level are your capital assets, and then the 53 is the remainder, or 54 million. If you flip to page 22, high level is so high level it's hard to glean a lot out of, because it's just, but one thing you can watch is the trends over years. And there was an increase in the net position, so that's a positive factor, from last year to this year. So that sometimes it's more important just to watch some of those trends. But where the county should focus, and I'm going to probably have you flip back to page 26 and 27. If you look at your major funds, and we're going to go right to the bottom of these two pages. So our general fund is the main fund that you have discretion over. And there was actually a positive increase in fund balance of a little over 5 million this last year. So you're sitting at a healthy fund balance, you don't have much debt, and if you look across all the major funds are, none of them are in a deficit position. They're all in positive positions. The grants had a decrease this year, but it's nothing concerning, and I'll probably expect it.
Yeah,
So-
those are due to ARPA funds being spent.
So, yeah, all the major funds and all the non-major funds in total had a good solid net fund balance at the end of the year. And that's really where the county operates in each of those funds. So I don't know that I want to spend more time, but if you guys had any other things, but just to highlight that you're sitting in a healthy financial position.
And if you look for these statements, if you look back farther, it's like starting on page 59, that gives you the budget to actual for the revenue and expenditures. So you can see where we met revenue, where we maybe didn't, either we exceeded it or didn't meet the revenue, and then where we, same thing with the expenditures. And those are the major funds. The non-major funds start on page 83. So those are going to be probably the pages you want to look at to see where departments fell within budget. Kind of like I reported this morning, we have departments that are going to exceed or not. So that's your detail for that information.
Okay.
I may have beat you to that, sorry, Brett.
No, that's great. No, appreciate you pointing that out. And that's a good point. As you look through, that's probably where you're going to want to look to see how they did compared to budget. But overall, sitting in a strong financial position. Is there any other areas
And if
Do
you want to
you guys
look,
wanna,
the same information for the enterprise funds are page 30, 31. Same information,
yep,
but those will be for those.
yeah, let's flip back there really quick, I guess.
So that's the landfill, 911, forensic pathology, and Bannock County events. So you can see, those we do not do budget to actuals for because they are enterprise funds, but you can at least see the revenue that came in and if we gained a net position or reduced net position. In 911, we did reduce net position, but that was because we had some capital items that we anticipated using reserves for.
All of them, again, fairly healthy fund balances. So, in the business type activities as well. That's a good point.
Okay.
I'm going to turn it to you two if you guys want to add anything else on that. Otherwise, I'll jump to a couple other reports.
I think if there's any questions, if you want to see something and you want to try and explain any information to people, the best is budget actuals. You can go through the notes, but a lot of times the notes are kind of mostly high level. There's a few items that with the new lease
Take one of
accounting
each of these.
requirements.
Yep.
You've got
Pass them
the
down.
descriptions of leases, you've got the debt schedules, you've got cash and investment information. And so the notes
Okay.
will give you a little bit more detail, but, and then the statistical pages give you just supplementary, gives you 10 years history on levies. It gives you, if you want to see the fund balance increases, decreases, it gives you that information as well. So back in there, it gives you valuations. So look at the stats section if people want information.
Okay.
That'll be where they might want to look. And these are posted online. I think we got back to 17
Okay.
on the website. So.
Yeah. Oh, appreciate it. Thank you.
Yeah, there's a lot of good information in there. It's kind of like reading the Bible, you know. So there's good information in there. It's, you can stay awake when you read it.
Well, some nights I tough time getting to sleep.
The other two reports, maybe the one that looks like, let's start with this one first. The one with this page. This is what we call a required communication letter. I'm just going to highlight a few things really quick. This is really our report to you as commissioners, and to Jason as the clerk. But basically, it outlines our responsibility. And I kind of mentioned that up front when I talked about our opinions. You know, our job is just to give an opinion on the financial statements, and we do tests of the balances and transactions. We use samples. We generally don't look at 100% of anything, but based on those, we give an opinion. So it's important to note that. So it just explains what our responsibility is: the plan, scope, and timing. No significant issues there. Significant audit matters. We reference the note to the financials and reference the new accounting standard, which is GASB 96, which we previously mentioned. There are estimates involved, and this talks about some of the bigger estimates, such as the pensions, the OPEB, and retirement balances, as well as depreciation, your landfill closure costs. All those, I mean, I named a bunch of them, but all those are fairly significant estimates to the financials. You know, we estimate what it's going to cost to close the landfills, and that liability is booked in there, but it could obviously be different. The actuals could be different than that. And it's the same thing on your pension liabilities and your other post-employment benefit liabilities. Those are all estimates, you know, based on good data, but they are estimates and those are subject to change. So this just points out that there are estimates involved in the financials. And we also point out that disclosures in the financials are consistent with prior years, and the accounting policies have been consistent, so that's good. If there were difficulties encountered, we'd bring that to your attention. There were none. I mean, I guess a little on our part, you know, we had some turnover and a little catch up, but we're actually ahead of last year.
Yeah.
That's the only good thing.
Next year we'll be ahead of this
Next year we'll
It'll be
definitely
fine.
be ahead of
It's
this
going to be
year.
fine.
As long as we keep moving in the right direction.
Yes, next year we'll be in March.
Yeah, that'd be awesome. Let's do that. Corrected and uncorrected misstatements. We do have, attached to this, we do have the adjustments. I'll summarize, I'll go through those quickly after we look through the rest of this letter, but Disagreements with management, have to report that there were none. This notes that we do require representation from these, they have to represent that they believe these are also fairly stated, and that they've also provided us the information to do the audit. And so we do get a representation letter, which we did obtain. The next one on the top of page 3 is what I call opinion shopping. If they don't like what we're telling them and we hear they're going out to somebody else, we have to bring that to your attention, but we're not aware of that, so that's good. And there are no other findings or issues, so the other information is just the information I've already referenced in some of the supplemental information and so forth. So I'm going to call that a good newsletter for you. I do want to, if you flip back to the adjustments, I just want to quickly go over these. Some of these were actually client proposed. After we started. So some of these, and there are some that if it has a GW by it, it's a once a year entry that's actually not booked on their internal records. But most of these adjustments were normal. We help with the pension or the Percy pension liability, and that's just that entry. They updated the lease adjustments. Trying to think of anything else that here was out of the ordinary. Let's just go through them here. Small. The investment adjustment is done at year end once a year, so that's been fairly consistent.
So Wipfli helps me with the the cash and investments entry. They'll give me what that needs to be booked at, and then also the leases entry, because we got rid of lease query because it wasn't working out. So they essentially handle the leases entry for us.
Okay.
And provide those to me.
Yeah, I don't think there's any others that I really needed to highlight. Again, some of these were requested by you, some of them we found as part of the audit, and some of them were normal year-end adjustments.
Most of them were usually, at one point when I give the auditors the final trial balance, any adjustments beyond that are pretty much what's on here besides those entries that I mentioned, right?
Yeah.
We just have a few more this year because
Yeah.
we hope to have a trial balance and have a few entries beyond that.
The rest of the pages are, and I'll just, basically just, there's some cutoff, and Christie's been consistent with the cutoff, but there's some cutoff things that we talked about. A lot of them are like, okay, 12 months, we book 12 months expense. We don't book the liability because we got 12 months expense, but technically from a GAAP perspective, we should be booking a liability at year end. So we actually recommend, that's one of our recommendations, to challenge some of those, and let's say maybe we ought to make a one-time investment and just get them in accordance with GAAP. So we're not, what we call, these are adjustments that we found that are passed. They're not booked in here. We've passed on them. And so one of the recommendations is to challenge some of those cutoff entries and say, okay, do we bite the bullet? And then we may have 1 year where we only have 11 months or 13 months
Like 14
expenses,
months, right.
or we would have 13 months of revenues, So we may have it one way, but then the next year it'll always be consistent and in accordance with GAAP. It doesn't materially affect the revenues and expenses, but it can, as it grows, it could be more material on assets and liabilities. So that's something to watch. But those are all just
So you want that to follow
individual
the calendar year, right? Is that what you're saying?
No.
Fiscal year. Yeah.
You want it to follow the fiscal year?
fiscal year, but what it means is, two examples. On a payable, if the expense was incurred or the service was, let's say this is better. If a service was performed prior to September 30, you paid it in October or November, or you received the goods, if you're buying goods, if you received it by September 30, but you paid it in October, November, some of those items aren't booked back as a payable and recorded in expense. They're just more recorded as a cash basis. And it's the same with revenues. There's a couple, all the big revenues are accrued, but there's a few revenues, the same thing. It's like, this was for September 30th, even though you didn't receive it till October or November. and those aren't being reflected back.
So we've got like contract law with some of our smaller counties. They take a while to pay us. Lava was one of those. So we would have basically revenue from August to July receipted, and it was 12 months worth, and that's how we would do it, because we wouldn't get that payment until November or so. What Fed's wanting us to do is go back to, assuming I know the amount, we'll have October through September. So like this year, I know I'm gonna have August and September extra revenue in 24, but in 25, we'll still have 12 but last year we only had, well, we still had 12. Anyways, we're gonna work
We'll have
through that, but-
one off the year that if we correct it,
Yeah.
if we one off.
And that's our concern right now with public defense, the way it's coming up. I mean, we're gonna be billed.
Oh, and
For
those,
them and-
for expenditures, I accrue those.
Okay.
There was just like, I think one of them that we had was like a phone bill. The service was for September, and I didn't pay it until October, but I had, in the prior year, I had 12 months. So we're just going to have potentially more accruals, both revenue and expenditures, because we won't actually have the items, so.
Okay.
You won't notice hardly a
That's gonna be
difference on your
difference.
revenues and expenses. Once we get, we'll have maybe 1 year, it'll be slight, but it won't be big. It'll be slight, but if they choose to book it, then we won't have what we call these past adjustments. But they're not really big items. They're smaller, and we have Chris to represent that. Yeah, they're not material, but we have to point them out. So,
Okay.
but going forward, it's something to consider. Maybe let's jump to the management letter, because that's kind of addresses some of that as well. And this management letter is really, I mean, technically, we don't have to even bring it up to you. Most like to know that this is really for management. This is suggestions. The one we just went over is the required communication. This one is, if we have recommendations, these are things we think it can strengthen internal controls or improve practices. And the first one is, in my mind, is a big one that's probably important. And we're already in, what month are we in?
Yeah.
So I don't know how it'll be implemented, this year, but really there needs to be a proof of cash from the treasurer's office to the clerk's office. And that should be done every month, meaning here's the actual cash that we have on hand plus all the investments. And then here's a list of all the funds showing the same amount. And those two should total, right? So, and I don't know when it stopped. It used to be done, and then with the new system, was it the new system
Yes.
that we stopped doing
That's
that?
when so what happened is when we transitioned to Tyler, we couldn't find the right reports to make that balancing happen. And so we've been trying to work on those, but we just haven't found the reports. So we've been relying heavily on Bonneville County to see what they've been doing. But then we also think there could be a potential, depending on how our cash is set up. This system is just so much different than Data Now was. So we're working through that process. And 24 is going to be a little bit rough as well through the audit. But we've got meetings in place and trainings in place to try to get those rectified.
Okay.
And that's the biggest one, in my opinion, of the recommendations, that, if that dollar amount grows and the further we get from reconciling, it becomes harder, right? So the longer we wait, it becomes harder to get that process, so,
You do your checking account every month.
yeah.
Plain
Yeah.
and simple.
Yeah, and with Tyler, we've not, because of those
Yeah.
not having the reports to double check each other. So,
Yeah, that's the first one. The second one is accounts payable reconciliations. There was just some subledgers that didn't tie initially, and we took some digging, and we had to find things out, but that's not a big one. I think that one can be easily worked through. The capital asset recommendation is really, that's probably the best thing I think to implement. You've talked about was you're going to change the software.
so we were having to use our legacy system because we didn't have them set up correctly in Tyler. So we just barely, you guys allowed us to pay the $4,000 to get them wiped out. So we're gonna get them re-imported into Tyler for FY24, and they'll be in there at the appropriate amounts. Using our legacy system was not ideal because it was a homegrown system, which allowed assets to over depreciate. So that just
Yeah,
didn't work.
the reports
So we
weren't
had
that-
to do a lot of manual
The
work.
reports weren't that great. I mean,
No.
it was,
They were
it was hard to have
Excel.
one source data, because one report would give you just depreciation, one report would give you the cost, and you couldn't see it side by side. Okay, here's the original cost, here's beginning accumulated, current depreciation ending. So it was hard to see that they were over depreciated, and it's hard to see that some of these other things were happening. So I think the software, it's gonna be a bit of a pain implementing,
Yeah.
but the software will make it easier.
Yes. And
What's the timeline on that one? When do you think?
we're hoping to have them in FY24, beginning balance.
Okay.
So you'll have them for this audit.
For this audit? Okay,
Yeah.
okay.
And we're putting the assets in their own fund, whereas that was the problem, is they had us put them in the fund of the asset, and that messed up the general ledger. And so we had to wipe them out to basically put them in their own fund. And probably more information than you guys care about, but that was the shortcoming that we had.
And this is the one this is the, Caitlin's been working on this one, right? Isn't
Yeah,
it?
she just
Yeah.
got them all wiped out, and so we finally got 23 officially closed so that we can move forward with 24.
Yeah.
And then I'll get her clean numbers to import.
Yeah.
Then the last item was cutoff of certain assets and liabilities. That's the one we started with, so we've already kind of talked about that cutoff, the revenues and the payables, to make sure those are booked in accordance with GAAP. And governments, it's a little different GAAP because it's modified accrual. So it's, the liability should be booked no matter when you pay it, but the revenue has to be available. So if you haven't collected it within 2 months, you don't book it as a revenue. But if you collect it in the first 2 months, 60 days after your end, then you book those back as receivables. But those weren't big items, and those were, small items. And I think our recommendation is just bite the bullet, put them all in 1 year, and then keep doing it consistently after that. So, so those are the recommendations, some things to work on. The biggest one is, in my mind, if we keep going and that cash becomes an issue, it may become a significant deficiency or material weakness. We just listed it as a management letter comment this year, but, so it's not in your main reports, it's not in here, so. But if it doesn't change, it might get elevated to that level. But overall, I'm gonna go back to where we began. Point out that, we're giving a clean opinion on the financials, which is what you want. And we believe these are fairly stated in all material respects based on the audit and the tests that we did. So even though we have recommendations, I always like to come back and say, let's put it back in perspective. We're still giving clean opinions. We're not modifying our opinions or saying we think this is wrong. So, yeah, we have some recommendations, but those can be fixed and they're minor.
Okay.
Other questions?
When did you, so you're working on this cash and bank reconciliation now, and when did you think that would be completely taken care of? It's part of this Tyler.
We've got a training in October.
Mhm.
Well, I've got one in September and one in October. Honestly, I'm not sure that our cash is set up correctly, and that's one of the things that we're gonna work through. And then they're also gonna provide us the reports that we should be using with the treasurers, because that was not done during implementation.
Okay. and
We
what-
tried, we just didn't get it.
So what's your timeline to have this all resolved?
For the end of the 24 audit,
And that ends with?
March, hopefully.
Okay.
We're addressing it. It's obviously, we're not gonna have it done for 24 because we have it balanced in the months, and it's August, almost September next week.
Right.
So we haven't balanced each month to that point, but we'll show that we have the steps in place, and then Treasurer's office will go back once they have the right reports to go back to, honestly, they'll go back to 22 when we implemented, because you gotta start there, because if you start now and see any discrepancies, you gotta work back anyways. So they'll start with that October and start working forward, and then just note if there's any differences where they're at, and then they'll be booked in 24.
Okay.
So the goal is before we issue 24s, we'll have that done.
Yeah.
Okay, and they'll basically go back, is that what you're saying? That makes sense, because it's hard, and the longer you wait, the bigger that period becomes, right? So it's like, the sooner you can get on it,
Yeah.
the better, and that's one of the key controls. So,
And I mean, it's, honestly, I think
We're
the
close.
bank statement said we had more money than, no. We were within reason. I mean,
Yeah.
it's, the bank had more money than we show or that we could reconcile to, but some of that is also the investments. Because
Yeah.
we have to book the investments once a year. And so we don't carry the investments as a month-to-month basis.
It was,
So-
I think it was against what I consider a fraud risk,
Yeah,
because there was more in the banks than we had on our,
in the GL.
no, yeah, more in the bank than we had on the GL, so.
So it's
A
not.
fraud risk would be,
There's not
there's,
money missing.
fraud
That's
risk
the
is that
point.
money
It's
is,
extra.
yeah,
Growing.
we need to find out where it belongs, but
Yes.
yeah, it was, I think if I remember right, it was against that fraud risk. But yeah, that's an important step that hopefully this process, it's a pain to go back, but it's important,
Yeah,
yeah.
and it was strictly just shortcomings in Tyler. So,
No, we're learning.
Yeah.
Anything, Jason?
Nope.
Christie? Well, thank you, and thank you to Christie and her team. I mean,
Yes.
I have all the confidence in the world in them. So I just like hearing it too and having it on the record that Bannock County is in good shape and we're in good hands. So thank you to Fred, thank you, Christie, and your team.
Definitely. Appreciate the opportunity.